The stock market has always been complex. This is especially true for the highly watched US market. There are many factors to consider. It's not just about monitoring changes in tariff policy. Recently, we also need to watch the Fed's June meeting. Whether rates will be cut is now a key question. The Fed is split into two main camps. More Fed officials are weighing in. Their recent statements show that internal disagreements are emerging at the Fed. These officials are trying to judge whether President Trump's tariff measures will cause inflation to last even longer. In this context, they are debating whether to keep rates steady for longer or consider a rate cut later this year. Some favor maintaining stability, others are open to easing later in this year. So there are different views within the Fed. Some policymakers view the impact of tariffs as temporary, so, to some extent, they choose to ignore the effect of tariffs. If this view is accepted by the market, it could pave the way for rate cuts. Going forward, the chances for a rate cut would rise. However, many on the Federal Open Market Committee believe that tariff driven inflation could become more persistent. So, in their view, cutting rates is not ideal. If there's no rate cut, the market might react negatively. This could pressure US stocks and increase market volatility. As for whether rates will actually be cut, we need to watch mainstream market views and see what the market expects. So, what's the mainstream market expectation? Most expect the Fed will not cut rates this month. This expectation has brought some positive sentiment. This is seen as a bullish factor for US stocks. As for future rate cuts, we will have to watch the June meeting, but the market mostly expects no cut. Of course, if a rate cut does happen, it will certainly spark strong optimism. If there's no cut, there shouldn't be much surprise, because that matches expectations. So, business as usual. For June, the biggest potential catalyst would be an actual rate cut, but that's unlikely. If it does happen, it would be a positive surprise. A surprise cut would trigger a strong short term rally. US stocks would surge, that's almost certain. It would create a wave of excitement. If there's no rate cut, that's in line with expectations. Looking at the current market, a rate cut is very unlikely. What's clear is if rates stay the same, the market should remain steady. Things will likely continue as usual because no rate cut means no major change for now. There's no direct impact from monetary easing. Next, we will watch for changes in tariff policy. With this kind of analysis, there are still a lot of uncertainties in the market. So, in such a complex, uncertain environment, how do we find clear opportunities? Many investors are asking this. We need to look for more certain opportunities. That's how you improve your success rate. So, are there any clear opportunities now? I found there's a promising one that I'd like to share with you. I'm not sure if you've noticed Mate's recent moves. According to the Wall Street Journal, Mate is now taking some major steps. They aim to use AI to fully automate ad creation. Mate is riding the AI wave and modernizing to boost its value. They're equipping the company with AI-driven solutions. This increases its value. In the US market, a company's value lies in what it brings to the future. It depends on the innovation it offers the market. So for Mate, this strategy aligns well with what the market wants. By using AI to fully automate ad creation, this automation clearly improves operational efficiency. For any business, you just tell Mate your goal and budget. The rest is handled by AI. It completes everything automatically, delivering the desired advertising results. What's more, Mate is now focusing its business on small and medium-sized businesses and developers. Why target small and medium businesses and developers? Because their budgets are limited. It's hard for them to find ads that fit their brand or to afford quality advertising. So what do? They try to handle complex marketing strategies, but it's tough for them. It's a real challenge. But with AI, these problems can be solved. Plus, this market is huge. 80% of Mate's ad revenue comes from small businesses, so meeting their needs is key. Smart solutions will boost Mate's revenue. Higher revenue, more ad income. Since 80% of ad revenue comes from these SMBs, AI-powered ads are a perfect fit. For these businesses, it's a game changer. AI truly solves their marketing pain points. For example, let's take a simple case. Suppose a cafe owner in the Rockies just enters promote new latte. The AI instantly generates 100 ad variations and automatically targets coffee lovers within 3 kilometers. It optimizes in real time until orders are maxed out. Looking ahead, this is a direct positive for Mate. This could be a breakout product and drive real growth for the company. So in the market, attention on Mate has been very high lately. Looking at Mate's stock performance, you can sense Mate's trend is very healthy. It's showing clear strength. Let me illustrate for you. Based on the current technical pattern on the daily chart, a clear reversal has taken shape. What is it? It's a classic W bottom. After the previous pullback, this correction is now over. A new rally has started. The market is beginning a fresh upward move. Following the W bottom reversal, it broke through a key resistance zone, then pulled back to retest. After the retest, it resumed its rally. The second leg up has begun, so right now it's clearly in an uptrend. The MACD is above the zero line. A bullish crossover is forming. This signals a new bull run has begun. Momentum is picking up, especially with the recent trading volume, which is gradually increasing. It's a steady rise. This is a positive sign. It shows the moderate volume increase is healthy. The trend is stable. Price and volume are moving in sync. There isn't a huge surge in volume, but the increase is meaningful. It's expanding steadily. This means investors are getting involved here. During this process, the stock price is cooperating. It has broken out after pullback. Following the correction, it broke the previous high. Technically, the bullish trend is now underway. How far can this rally go? What's the upside target? Where's the limit? Some might say it could be the previous high around 740. So our forecast is it could reach 740 within a month. But many institutions have given their outlook. They rate Mate as a value buy. As for the future price, most are very optimistic. They predict it could hit 750. Will it reach this target? It remains to be seen. Time will tell. Recently, Mate's performance clearly shows a new bullish trend. The uptrend is strong, even with modest volume. There is no huge spike, but the candles are solid. The stock broke through resistance. It overcame the previous resistance zone. Earlier, this area was a hurdle. It faced selling pressure. After pullback, it stabilized. Once stable, it broke out decisively. It's a clear breakout above resistance, so a strong bullish pattern is now in place. Our target is 740 as the first price target. First target. Within the next month, there's a high chance of achieving it. We will see if time confirms this. For Mate, hitting this level isn't hard, it's achievable. Over the next months, especially with the current market, Trump's tariff policies are unpredictable. They keep changing. Good news, then bad news. Sometimes boosting expectations, sometimes doing the opposite. This uncertainty keeps pressure on the market. It creates a lot of headwinds. Negative expectations can arise. With all these swings, the market is uncertain, especially in these choppy conditions. Clear opportunities will emerge. Uncertain capital looks for direction. It moves towards these opportunities. That's why in a complex market, Mate offers a clear direction. It attracts a lot of attention, especially from short-term traders. They are watching closely, looking for short-term high-probability trades. For Mate, that opportunity is clear. Beyond the technicals, we see a clear uptrend. This is a strong bullish signal. It's a clear buy signal with steady volume support, and a breakout is a very positive sign, combined with Mate's own positive fundamentals. So when both fundamentals and technicals align, they reinforce each other. The probability of further gain is high. Market expectations are also very optimistic, very positive, very strong. Many analysts have issued buy ratings. They also see strong upside potential. Their forecasts are very optimistic, not conservative at all. So their target is 750. This means the stock could stay strong in the near term. So let's see how it performs over time. Alright, that's a brief analysis of Mate. If you're interested in this company, feel free to comment below. Let's discuss in the comments. Share your thoughts. Where do you think May's stock will go in the next month? Do you think it will reach 740? Our first target is 740 compared to 750. 740 is more realistic. This level shouldn't be difficult for the stock to reach. As for 750, we will stay cautious for now, so we will take a conservative view going forward. Reaching 740 could already be solid result. This target is likely achievable. Let's see how it plays out over time.